Good morning, everyone. Welcome back to Morning Markets on Friday, the 22nd of May. A number of things that I wanted to share with you this morning that we've been discussing as a team. I think earlier in the week we touched on sentiment and how sentiment is an important driver of asset markets. And we touched on four factors that we've been considering. The fiscal response and support that's come from government, the support that's there from central banks from a monetary sense, and then two factors that related to COVID-19. One was around fatality and infection rates and the flattening of curves, and the second factor around the reopening of economies. Those being seen as the main drivers of sentiment in recent market times. I think over the course of the past week, something else has started to reappear, which has been a key driver of risk and sentiment historically, and that's of political risk and political rhetoric. And that's in two areas. One, the ongoing friction that there seems to be and continues to grow, I think we would say, between the US and China. And then on the other side of that, what's happening in Brexit discussions and the relationship between the UK and Europe. Two things that seem to have been more prominent this week. I think in markets yesterday, sentiment was definitely concerned about the increasing rhetoric and pushback on China from the US, and that led to asset markets and particularly equity markets being weaker, both in UK, Europe, and then into the US, where the US was down between 50 basis points and 1%. Not significant moves, granted, in the overall scheme of things, but just worth noting. The other thing in the performance of the US equity market yesterday was that in even a down market, some of the economically sensitive sectors, and by that I mean the financials, the banking sector and the transportation sector, outperformed. So I touched on earlier in the week how they'd been outperforming in an up market. So they've outperformed in a down market. That's one of the few times that I've observed that in the recent months. So something that I will continue to watch just to get a sense of what that means for the market and what it means for broader recovery and a broadening out of recovery trends. Turning then to sovereign markets, we saw sovereign yields come in a little bit, just given that backdrop yesterday. Just worth noting in the UK that both the 2-year and the 5-year gilt traded with a negative yield yesterday, and I think that's the first time that we've seen that in the UK gilt market. Turning then to currencies, we saw the dollar strengthen as you would expect in that sort of a more risk-off environment. And on the commodity side, oil has come off slightly. I think that's understandable given how far oil has moved over recent days, and it's only probably 3.5-4 weeks ago that we were talking about a negative oil price. Turning then to that point on sentiment and what's happening there. The rhetoric between the US and China clearly has stepped up over the course of this week. And overnight in China, what have we seen? We've had the National People's Congress, and that has generally set out some of the agenda items which China will be focusing on as it relates to the economy. The first of which is the removal of the GDP target for the year, or not forecasting one, I should say. That's something that I haven't seen in the past. These meetings always set out a GDP target. I know people are sceptical of the data that comes from China, and that's maybe well founded. But what I think you can take from it is just that it's setting out the agenda, it's setting out how the government are thinking about the domestic economy. Interestingly, the removal of the target, they suggest it's because of international factors and the uncertainty that brings. But I would say that ultimately the international feeds into the domestic. The two are inextricably linked given the export relationship that China has with the rest of the world. The other factor that's come out of that's influencing market sentiment today has been the suggestion that there will be an imposition of a national security law into the Hong Kong legislative agenda. That's challenging from a Hong Kong perspective. Cast our minds back to last year and the pro-democracy protests that we saw. That's going to cause some friction there. I think it also will cause friction with the US, and indeed President Trump alluded to that last night. So we will see how that evolves, and that's why we've seen Hong Kong equity market be off 4 to 5% this morning, and some weakness into the Chinese domestic equity market as well. Turning to other things that we were discussing today, we touched on the unemployment data again from the US. Yes, the overall numbers continue to trend down, but we're now talking about in the region of 38 to 39 million individuals unemployed in the US over the course of the past 9 weeks. We also had retail sales data this morning from the UK. Weak as you'd expect. We're all at home. We're not able to go out and consume in the way that we normally would. What did we see? We saw, as we've seen in other geographies, just that transition to online, and online growing very rapidly, and I think accounting for a near 30% of overall sales in April. So that secular trend of online seems to be potentially getting a boost from what we've been observing through this lockdown phase. That's it for today. Please join me again next week and enjoy the bank holiday weekend. Thank you very much.